Hey everyone, and welcome to the PivotBoss Closing Report for February 16th, 2016. I am Frank Ochoa, aka PivotBoss, with analysis for the week here. Taking a look at the ES in a daily time frame, we've seen a bounce off of our key zone of support down here, 1811 to 1804. We've since seen this thing turn around and come very close to reaching our 1921 target already. We've obviously had a very clear range that's developed between 1921 and that 1811, and basically we had the 1921 to 1811 very early on. Once we had the tail end, we had the reversal back up, and then after price failed to hold above the HPN, we were looking for a move back down. So we've nailed kind of the wave of the market here, and now prices are pushing higher. Now here's the previous week's high price, about 1883s. That's going to be an important zone to watch right there, because if bulls can keep price above that zone, 1884, we could see a continuation into 1921 very short term. Any pullback below this previous high opens up a potential pullback all the way into the previous week's close at 1858, which could be a zone to defend, even as low as that 1849, which is the CLVN. So right now, overall, we have a pattern of higher lows and also higher highs. Expect for more of the same. A pullback should be defended for a continuation into 1921 and 1939 ahead. Now, taking a look at the intraday time frame for the ES, you'll notice here that price is currently holding with clear resistance off of 1892. Above the 1892 opens up a clear path to that 1921 with scaling targets at 1903.75 and 1912. 1903.75 is important because that's the Fed day key level. So that's the FOMC level on January 27th there, and that was the level that price was at right after the report, or as the announcement was being made. So important level to watch there as well. Now, if price fails to hold above this 1870 zone, we'll likely see price auction back downward, perhaps as low as 5-day value, where bulls could come in and potentially lift this thing back up. So continue to watch this 1893 very closely short term, as either a return to 1870 or a push into 1921 will be seen very shortly away from that level. Now, taking a look at the crude oil chart in the daily time frame here, this one had a significant rejection off the previous week's high price. So right here, that's the previous week's high, 31.38. Price came into that level and price auctioned back down toward 29s here and back below the previous week's close of 29.24. We've obviously seen all bounces here have been seen as selling opportunities. This rip also sold. So right now we're seeing the same off the previous week's high. The expectation here would be any pullback perhaps into 30.14 could be seen as a selling opportunity for a continuation into 27.56. Now, any pushback into 27.56 could still be defended for a return back up. So we got to watch that very closely to see if bulls will defend the previous month's low on a retest. Looking at the intraday time frame here, you can see how significantly price was rejected off the 31.38 here. Very clean rejection off that zone. As a matter of fact, prices have held below that level for some time now. Very clean rejection. Now prices are sitting right here off the bottom of the weekly pivot range. That's an important area to watch, even down into 28.36. Bulls want to keep that area defended for a continuation higher. Failure to hold that level opens up a return to 26.05. All right, let's take a look at gold. Here's gold in a daily time frame. We talked about how price had formed a 300% of average daily range here last Thursday. I mentioned that could be the blow off top that we're looking for. And I also said if we form a very quiet digestion day the following day, that's a pullback day, that could be our extreme reversal sell signal that opens up a potential pullback, likely into 1200 to 1192, and that's what we saw. Very solid pullback into that zone. 1192 is the key level right now where bulls are defending for a shot at seeing a retest of these highs back into 1263. Otherwise, a failure to hold above 1192 opens up a return back to composite VPOC at 1126.10. Looking at the intraday time frame, you can see that 1232 key level, very important. We talked about the fact that bulls were defending that zone for a shot higher, but failure to hold it, given the head and shoulder type pattern opened up a clear path directly into prior 5-day VPOC here, and that thing nailed it perfectly. So that analysis was right on the money. And ever since then, price pulled back to the bottom of the pivot range, and so far is being defended. So right now, the fact that price is being defended at the pivot range after initially taking it offered opens up a shot into the previous week's low at 1164 half. All right, let's take a look at the NQ. Here's the NQ in a daily time frame. What we talked about last week was how price came below that 38.93 half key level. So right here, you see 38.93 half. That's the August low on this contract, and price held below that low briefly and then popped back above. And I mentioned if price pops back above that zone, that small rejection of this level could open up a move back to the center of the key range at 42.26, followed by the potential to see price auction all the way into 45.58. And so far, we've seen at least the first leg of that big push up already, and the expectation would be for a completion or at least a follow through into 42.26 short term. Now keep in mind, we are now starting to test the first area where bears could come in to defend. And if you look at price here, right beneath these lows, this was prior support until it went offered on this session. Now we're coming back to retest that level from below, and that's your 4100 key level. Bears want to keep that level defended for a shot at seeing a return to lows. Otherwise, above it opens up a path into 42.26. All right, looking at the intraday time frame for the NQ, you'll see right here that price continued higher after the initial pullback into 40.46, the previous week's high. So for much of the session, price was pushing downward within this channel and then came into the previous week's high price, 40.46. That's where bulls defended and took price back toward the recent session's highs. Overall, price only traded half, 50% of its average daily range. It's been averaging 124 points per session over the last 10 days, and on this session, it traded just 57.75. So a big time compression phase that we're seeing right now, 50% of average daily range. That narrow range right there could spark expansion in the session ahead. So that's what we're going to be looking for the upcoming day. Any push beyond 4100 opens up a continuation into 4130 and 4196. Failure to get or see acceptance above 4100 opens up a return to 4046 with a shot at retesting 5-day VPOC at 3997. All right, that's it for now. Let's see how this thing plays out heading into the rest of the week. Good luck and trade well.